Hello, everybody, and welcome back to the Open Interest YouTube channel. I'm Mike Coe. Remember, please be sure to like and subscribe and hit the notification bell to be notified when we release new videos, and send us your comments and questions, and we will try to answer them in future videos. The macro drivers for the markets remain the same. Rates are higher once again, albeit modestly. Let's examine how some of the more notable options trades in ETFs and equities were positioning themselves. LQD, we've talked about this one a lot. The investment grade corporate bond ETF traded well above average volumes and hit fresh 52-week lows. The largest single print traded 75,000 at the money May 114 puts, 30,000 in the money May 118 puts, and 45,000 out of the money May 110 puts. Exchange data suggests the trader was closing the May 118 and 114 puts and opening the May 110 puts at 58 cents. LQD is now nearly 16% lower than the August 4th highs and is 17.5% lower than the mid-2020 highs. The declines in LQD are now approaching those seen in the 2007-2008 credit crisis period. Although the put volumes today were well above average, on balance, the trades appear to be moderating the bearish stance somewhat, harvesting profits on some earlier bearish bets, and the May 110 put bet, while substantial at over $2.6 million in premium, deploys only a fraction of the nearly $24 million in premium in proceeds from the sales of the 118s and the 114s. While LQD hit 52-week lows, XLE, that's the energy ETF, hit fresh 52-week highs. Overall sentiment was bullish, with options markets getting net longer by about $80 million deltas. There was some profit-taking adjustments made to earlier bullish bets. We saw a trader roll 10,000 June 80 calls up to the 84s at prices of $4.50 and $2.71 respectively. Equal weight biotech ETF XBI fell over 4%, now down nearly 25% year to date. A substantial but short-dated weekly 89.85 put spread likely adjusts an earlier bearish bet, but the most notable opening activity to my eye was the May 95 calls. 30,000 of those traded at about $1.09 opening. Several hedge funds have big options positions in XBI, and those include Point72, LMR Partners, Soleus, Twin Tree Management, Nantahala Capital, Artol Group, and Bronte Capital Management. Of these, Point72 reported the largest call position, 22,000 contracts as of their most recent 13F. UNG, the U.S. Natural Gas Fund ETF, is up over 6% today and has more than doubled year to date. The ETF traded more than double the average daily options volume. The most active contract seeing opening activity are the weekly 24 strike puts. Roughly 8,600 of those traded at an average price of 12 cents, possibly hedging earlier bullish bets. Moving on to single stocks now. Twitter, once again, one of the most active single stock options, seeing unusual volume, although the longer the saga with Musk goes on, the higher the average options volume becomes. Overall options flows in Twitter were bullish, but the largest single trade was a ratio risk reversal, or collar. A trader bought 3,000 of the May 43 puts, paying $2.45 a contract for those, and then sold 5,000 of the May 50 calls at $3.15. My guess is this trade is likely hedging a long position in the stock, where the trader is willing to unwind 500,000 shares at 50, but is getting some protection below 43 as of May expiration. And they have the benefit of collecting about $840,000 in premium. So if Twitter remains between those two strikes, they're just going to get to keep that and lower their cost basis on the shares. Bank of America reported earnings before the open today, and the stock is seeing a nice bounce, up 3.6%. When I last looked, Bank of America traded roughly 2 times the average daily call volume, with bullish bets beating out bearish bets. Options markets got net longer by about the equivalent of 600,000 shares. That's about $24 million worth in round numbers. A buyer of 5,000 May 13th weekly 38 calls paid $1.35, betting Bank of America could extend its gains over the next couple of weeks. That trade is already in the green by about $250,000, and another money center bank seeing bullish flows and rallying today with Citibank, the weekly 55 calls most active there. Citi reported earnings last Thursday on the 14th. It's up about 4% since. Caterpillar up a couple of bucks, trades more than 2 times average daily call volume. Weekly 235 calls were the most active. 12,000 of those trade for about $1.78. What's interesting is not so much what these trades are betting on, that CAT rallies for the rest of the week, but really what they're not betting on, because CAT is due to report earnings on Thursday of next week, the 28th. whereas the bulk of today's flow expires at the end of this week. Options markets right now implying CAT could move about 5.2% higher or lower by a week from this coming Friday. Johnson & Johnson traded about double average volume, about $3 lower or 1.65%. The company reports earnings tomorrow. Options markets are slightly bearish. We saw an opening purchase of the April 29th weekly 170 strike puts. It's also possible that the announcement that the company will pay $99 million to settle a West Virginia opioid lawsuit may also be weighing on the shares. That's more than double the $48 million the company had offered in the national settlement. West Virginia was one of several states that didn't join the nationwide $5 billion opioid settlement. The company did not admit to any wrongdoing. Johnson & Johnson no longer sells opioids in the United States. Zendesk traded 3 times average daily call volume. Options markets appear to be bullish overall, despite the more than 3% decline in the shares. The company reports earnings next Thursday on the 28th. Although up roughly 16% year to date, it's still down about 20% year over year. Activist investors have been highlighting software companies they think could be good potential takeover candidates. So it's interesting to note that JANA Partners, the event-driven activist fund that's run by Barry Rosenstein, is one of the largest holders of options in Zen, according to the most recent 13Fs. The July 140 calls were the most active contract, over 14,500 traded at an average of about $5.64. Danaher, which reports earnings pre-open on Thursday, traded 6 times average daily call volume. That the result of over 5,000 September 280-300 call spreads. Those were trading for close to $9. Exchange data indicates that this was an opening buyer. Danaher is down over 16% year to date, but the life sciences company remains well loved by the sell side, 20 buys, 2 holds, 1 sell, and the average analyst price target is more than 22% higher than the current stock price. Perhaps a trader is willing to risk about 3.3% of that amount, betting that the company has about 10% worth of upside over the next couple of months. I'm Mike Coe. That's all I have for you on this segment. Again, please be sure to like, subscribe, ring the bell for notifications when we produce more videos like this one, and feel free to share your questions or comments below or by sending me a tweet at Michael_Coe. Thanks for watching. If you liked the content, please consider subscribing to the Open Interest YouTube channel. That's youtube.com/open interest. And of course, you can also follow or tweet me at Michael_Coe, or go to our website, www.openinterest.pro. Thanks for watching.